Welcome back to Hitting the Bid, place for retail traders by a retail trader. I'm your host, Jeff, and I'm here to break down market moves, share lessons from my own trading journey, and help you navigate the ups and downs of life in the markets. Whether you're just getting started or have been trading for years, this show is here to help you stay sharp, stay disciplined, and most importantly, stay in the game. You can subscribe to my weekly newsletter at news.hittingthebid.com. Today is Thursday, August 21st. Let's get into it. Now just looking around the market here, the S&P 500 via SPY down about $2 on the day, 0.3% or so. Really been selling off. Started last Friday and continuing into this week after, let's see, this is the 13th, so last Wednesday, hitting a high of 646.19, down about $11 since then. That's also kind of bleeding over into QQQ, down 260 on the day, 270 on the day, about 0.5%. And small caps, Russell 2000, actually up on the day here. That is up about 10 cents. Just slightly green compared to yesterday. So really not too much, but it is the only one that is up on the day as far as looking at S&P 500, QQQ, and IWM. The VIX up 70, or about 80 cents on the day, up about 5% or so, corresponding to the down move in equities. The VIX is increasing. Bitcoin has kind of seen a lot of selling compared, over the last week or so, down about $10,000. So a pretty big move here. Seemingly finding a little bit of support here at this swing high. We'll see if that continues to hold, and maybe we can see some upside there if it does hold. Bonds down 21 ticks, about 0.57%. Really been weak over the last couple of weeks here since August 5th. Mostly been selling off here, and today a pretty big red candle on the 30-year Treasury bond. We have a couple of currencies here. The British pound futures down about 0.3% to 134. It has also kind of topped out here since last Thursday or so. And similarly in the euro, selling off a little bit, but kind of in this range here, top to bottom, a little bit in the middle from this swing high to this swing low. So we'll see if it's where it goes from here. It could be a candidate for a range trade strategy with IVR at 35. But with tomorrow's economic policy speech tomorrow, I'm holding off on any trade there. Gold down $1. You're really just flat. Not really doing much over the last week or so. Crude oil up 50 cents, about 0.86% or so to 63.25. Kind of found a little bit of a base here, and we'll see if it can find some momentum to the upside. And nat gas up 8 cents today, about 2.9% to 292, but really been selling off here the past month. Was about 376, got as low as about 282 yesterday. Finding a little bit of upside today, but we'll see. It hasn't really been able to continue that. When saw some buying here, but sold off again. So we'll see if there's any change in market structure there. Now just looking at a couple of trades, the two trades from last week. We'll look first at Amazon. So I closed it yesterday for a small profit. I closed it after it was approaching this gap here. It looks like it sold off after that. So I made a little bit of a profit. I think about $25 or so. Yeah. So but it did sell off, so I'll have to take a look back to see if I may have missed something there. And then the other trade from last week, so Cisco. So this one I actually closed the following day. So here's Thursday, and here's Friday. So I was able to close it on Friday after getting a sell-off in the morning. It was a quick $95, and I was actually away from the screen during the morning, so I decided to close it here. So you can see I entered 10:30 a.m. on Thursday, sold it back at 9:06 a.m. on Friday, and then I did re-enter on Monday as I was trading back into the range here. I'm still expecting some more downside, so I wanted to still get that exposure here. I'm expecting it to potentially trade 65, 66 over the next couple of days. We'll see. We'll see if I can get that here. I got about 29 days to expiration, so I'll look to close it or roll it for next week. Now for today, I don't actually have a trade because of Powell's speech at the Jackson Hole Economic Policy Symposium tomorrow morning. I think it's at 9 a.m. Central. I really have no idea, and really no one does, on which way the market's going to react during the speech. If I see a specific trade setup after Powell speaks, then I may enter something. But my base case is that it's more likely volatility will expand with a corresponding down move in equities. Post-speech, this is just my assessment, and others will have differing opinions. But it's part of my strategy. I go into it with a bias. If price action correlates to my bias, I look to enter if I have a clean setup. And if price action goes against my bias, I'll just lay off. Now, just to get my bias going into it, I expect a mostly hawkish tone, aka leaning toward a higher for longer rates due to sticky inflation risk. And here's how this is kind of how I expect markets to react across the sectors and a few assets here. So starting with the S&P 500, so kind of large cap stocks, likely to dip. The higher for longer rates mean tighter financial conditions, reduce future cash flow valuations, and potentially slower growth. So they may hold up slightly better than small caps due to stronger balance sheets, but the pressures will still be there because of the higher for longer rates. Technology sector, so the Nasdaq, a little more vulnerable. Tech valuations are pretty heavily based on future earnings, and they kind of get hit harder by higher discount rates. So I expect some underperformance versus the broad market in the S&P 500. And small caps, so the Russell 2000, likely even to get hit even harder than large caps. Smaller companies are more sensitive to borrowing costs and economic slowdowns. So credit, hawkish Fed may mean that credit is more expensive, hurting those growth prospects. Now, with the down move in equities, I expect volatility to increase. They tend to move opposite of each other. So I expect with that risk-off sentiment, I expect volatility to increase. Now the U.S. dollar, really it may be expressed through futures here. So I expect the U.S. dollar to strengthen. Higher U.S. yields and tighter monetary policy, they tend to attract capital into the dollar. So I expect dollar strength against some of these major currencies. So I expect the British pound to sell off, and then probably the euro, that's the biggest contributor to the dollar index. I expect it to sell off also. Now gold, bearish on gold going in tomorrow. Stronger U.S. dollar and higher real yields typically weigh on gold since it pays no interest. So I expect that potentially to go down here. Crude oil, kind of mixed, but still leaning a little bearish. Higher rates, they can imply slower economic growth and a reduced demand outlook. But crude is, really supply driven. So, could go either way there. And then finally, Bitcoin, just kind of like gold, stronger US dollar and higher US yields tend to weigh on it. And it's also a risk asset. So it's, with the higher rates, tighter liquidity, it can be a headwind for Bitcoin. So we'll see if that what comes of it tomorrow. So just in summary, risk assets, so equities, crypto, small caps, bearish. Volatility, I think that will increase. The dollar, also bullish on the dollar for tomorrow. Inversely, bonds I expect to go down, gold also to go down, and then crude slightly bearish, but kind of mixed. So again, this is just my bias going into it, but there's really no way of predicting market reaction. So any trading I do will come after and not before. So, and I'll look to see what happens on the intraday. I may look at the 5-minute or the 2-minute just to see the initial reaction. But then as the morning progresses, that may be where the true move is going to go. So I'll really wait a little bit before entering any position. And that's it for this week. Thanks for tuning in to Hitting the Bid. If you enjoyed today's video, don't forget to subscribe, leave a review, and share it with a fellow trader. And don't forget to sign up for my weekly newsletter at news.hittingthebid.com, where I share market insights, interesting tickers, and practical strategies to help you grow as a retail trader. Till next time, trade small, trade smart, and keep hitting the bid.